continue. Okay, there is a security warning I'm going to ignore. Okay, so I created, and it's just a little itty bitty just spreadsheet that I have some fun with, and I work with you guys on it in order to work and focus in on the concept of adjusting entries and closing entries. So here's my journal page. See, it's nice and beautiful. Here's one that I pre-made that just looks really nice. And then here I have my financial statement. So I've got an income statement, statement of retained earnings, very similar to the statement of equity, except the only thing I'm going to focus in on is the change in the retained earnings. And then of course the balance sheet. And I've got little boxes in here so that everybody could easily do the balance sheet and the income statement and the statement of retained earnings. And then I have this beautiful thing. And where did it go? I'm going to have to press home. Where is my home? There's my home. Okay. And so I've got this very big, long spreadsheet where I am going to go and double check everything. As you can see here, I have my unadjusted trial balance, and then I have my adjusting entries. And I have this set up, and I think it's going to auto calc for me. So we're just going to go and we'll double check and make sure that it does everything I want it to do. And then we'll work through the rest of it, and we'll go all the way to closing entries. So first thing I'm going to do is I'm going to come over here, and I've got some things that I need to do. I purchased an insurance policy on January 1st, 2020. 1 month of this policy has expired. Okay, well, let's go check that out. So here's my prepaid insurance, and it's telling me that I purchased this insurance policy. It's for a year, and $3,600, 12 months is a year. So I need to go in and I need to record that. So I'm going to go ahead 131 and ignore the back end dates. So I'm going to have insurance expense. And I'm going to go 3,600 divided by 12. And I believe that is 300. Okay. Now I'm also going to go in here and I'm going to reflect that my prepaid insurance is going to decrease. Remember, my prepaid insurance is an asset. Assets decrease on the credit side. This expenses always increase on the debit side. So there's my first entry. So this is an adjusting entry. I'm going to put adjusting entry. And I'm going to put 1 for right now, unless I have some other name on it. And then I'm going to come all the way back over here. And I see here that I do have 1 on it. Okay, I completed 50% on a contract of 100,000, but I'm not going to bill it till next month. So when I look at that, I can tell that I have earned 50% of that 100,000, which happens to be $50,000. So I need to record that. So let's go back over here, and I'm going to go check my trial balance and see what is my service revenue. Okay, 1/31. Okay, accounts receivable, because I haven't sent the bill off to them, but I have earned it. And so it's 50,000. And my service revenue. Okay, excellent. Okay, so that's adjusting entry 2. There's not that many. I just have a good time doing these. Okay, same next one, 3. We purchased equipment on January 1st, 2020 in the amount of $100,000. There's no salvage value, and it has a useful life of 10 years. So we need to record the monthly depreciation. Now, when I describe depreciation to you, they always give you the annual in the book, but I always take it 1 step further and look at the monthly, because normally we depreciate monthly. We don't depreciate once a year. We do it every single month. So I have a handy dandy little depreciation calculation down here. And I'm going to go 100,000. It has no salvage value. Its useful life is 10 years. That means my annual depreciation is going to be $10,000. I divide that by 12, I get 83.33. What a beautiful number. So that's what I'm going to go do over here is I'm going to put in that depreciation. If you have any questions, please holler at me. And I know it's an ugly number. It's one of those that just kind of happens. Okay, I just have it down as accumulated depreciation. Okay, remember, accumulated depreciation is a contra asset. So it's going to behave exactly the opposite of our normal asset accounts. It's going to increase on the credit side. And that's because the accumulated depreciation account shows us how much of that fixed asset we have used up. Okay, so this is adjusting entry. Okay. I'm having a good time here. I actually really like doing these. Okay, so we got that one. So now I'm on 4. Okay, so what I'm going to do is I have got Paul Brown, Alan Jones, George Anthony, and Adam Peters. I don't know. I just got all kinds of stuff. So right now I've got their hourly wage and they're making pretty good money. I like to take care of my pretend employees. And this is the number of hours they have worked, but I haven't paid them. I'm not going to pay them until February because that's when the payroll period ends. So I'm just going to do something really simple. I'm going to hit the plus and I'm going to come over to this cell and I'm going to multiply it by the hours. Notice I get this beautiful little description in here and it just automatically calculates for me. Now I'm going to come back to the trial balance and I'm going to double check to, that's my wage expense. Where's my wages payable? Okay, so I already have, now remember payable, anytime you see that term, that means that it's a liability. Liabilities increase on the credit side. And you can see I already have a credit of 200. So that's why that's sitting there. So my adjusting entry, I need to show that I owe my employees $5,576. I already have $200 on the books. So I only need to do an adjusting entry of 5376. And let me put that in 5376 so I don't forget. /31. Okay. Wage expense. And that is my adjusting entry 4. Now I have another entry just like this one. And it has to do with vacation because I think that's important for everybody to understand vacation. So up here at the top, recorded vacation owed to the employees. So right now, here again, my employees, their hourly wage, how many hours they have on the book of vacation. It looks like I already have $3,000 on the book right here, vacation payable. So I've already got a credit of $3,000. So let's see what happens when I go in here and I take that cell and multiply it by this cell. And then I go over here, grab that little black cross, drag it down, and boom. Now, I'm going to fix that. Hang on. There we go. 1579. So there's my entry 1579. So I'm going to come over here, my journal. I'm going to put in my numbers so I don't forget. Okay. We're going to call this vacation wage expense. Probably something very similar. Vacation wage payable 1579. I hope you guys are having fun, because I am. Adjusting entry 5. And that's 131. And the last one, I have a feeling this is unearned revenue. Okay. I don't know. It's edge. Okay. Earned 75% of the unearned revenue. So I'm going to have to go figure out what's on the trial balance. So here's my unearned revenue, and I've earned 75% of that. So I'm going to go in here and go plus 1,500 times 0.75. Okay, 1125. Now, unearned revenue is a liability. Liabilities increase on the credit side, but we're not increasing, we're decreasing it. And I'm going to go ahead and put my revenue account here. Okay. Somebody walked into my house, and my dogs are doing what dogs do, and I did not know he was coming. So that's okay. We're just going to keep on going. Maybe I can talk him into taking accounting classes. What do you guys think? Okay, so I'm going to go ahead and put my adjusting entry in here. And that's adjusting entry number 6. Now, normally what we would do is we would take this information and we would transfer the journals over to the ledgers. Okay, so I'm going to eliminate that process, and I'm just going to go straight into my trial balance, and I'm going to go ahead and put those entries in. Now I know in my journal, I'm going to start at the top. So this is my adjusting entry number 1, my insurance expense and my prepaid insurance. So I'm going to come down here. I'm going to put my credit, and I'm going to put my tick. My tick is 1 because that was my first entry. And then I'm going to come down here, and I've got insurance expense right there. There's my debit. Notice as I enter these in, my debits and credits remain in balance. Okay, awesome. Yay. What more in life could I want? Okay. My next one is going to be my accounts receivable and service revenue. So that's 50,000. I got to wait for the screen to click down. Okay, why? I don't want to see you anymore. There we go. Let me just try to figure out how to get around it. Okay, this is 50,000. I'm increasing my accounts receivable. That's adjusting entry number 2. Now notice right now, I'm not in balance, either one of those. So I'm going to come in here to my service revenue. I'm going to add that 50,000, and that's going to be 2. Now what I'm going to be doing here is I'm going to be going to dash something else, because actually I've got 2 revenue entries that I need to take into account in this specific line entry. Okay. The next one is going to be, so I've got those 2, depreciation expense of 83,833.33. Okay. So knowing this, I know that my credit is going to go right there, and that's entry number 3. And I'm all the way down here to my depreciation, 833.33. And you can see I'm in balance. Beautiful, lovely, makes me happy. What more in life could I want? Okay, now I'm going to go over to my vacation and my right here. My next one is my wage and my vacation. So I got 5376. I should have some fun with that. Let's see, and put wrong information in. See how many of you guys catch it. 5376. And that is 4. And then now we're going to do the vacation payable side of it. And that's 1579. Okay, and as I go on down, we're gonna see I've got that already set up, and so that's gonna be 5,1579. Double check, everything's still in balance, everything's looking beautiful, makes me happy. Go, you can go ahead and walk on out. Yeah, yeah, the bad dog's gone.
Thank you. Bye.
My salesman son here, he's always selling something. 1125 is my unearned revenue. Remember, I said I was going to have two entries there. So here's my liability account, 1125, and that's going to be my last entry. And I'm going to actually add it 1125 right there and put my tick in there. So I actually have two ticks in this one little column right there. Now I'm going to double check, make sure that oh, look at that. It's gorgeous. My debits and credits are all in balance. And I'm going to do something here because it's going to drive me nuts if it's not done. Okay, there we go. Now, the next step that we do in these, and I'm not going to do the income statement yet, the formal method, I'm just going to do what's on the worksheet. And then I'll go over there and do that in just a sec. Now, these expanded worksheets, what we do up here, income statement, I take all the accounts that belong to my income statement, revenues and expenses, and all I do is just take this and copy it. And now I'm just going to paste it. Up. Actually, I'm going to do that again. I'm going to paste it, but paste it as numbers. There we go. What I had done before is I pasted my formulas instead of pasting numbers. So I just need to make a mirror of the previous one. Let's see. I'm going to grab this, drag it down. Now, this is already set up to AutoCalc. Here's my revenue. Here's all my expenses. And this is my forced balance. So basically what this forced balance is, I'm going to put it in parentheses, is a net income. Okay, there we go. And so now when I do that net income, when I add it in there, you can see now my debits and credits balance. So we're going to do the same thing over here for the balance sheet side. So I'm going to grab all this information and all the way down to that 1,800 dividend. I'm going to copy. I'm going to paste the numbers. And I'm going to scroll on down. Look at that. That's the same amount. So that's my net income, and that's how I get that to forced balance. So everything is looking good. It makes me happy. Doesn't take much to make me happy. I'm a happy camper. So I'm going to go ahead over to the I'm going to go over to the income statement or the financial statements. Actually, start with the financial statements. And I'm going to go ahead. This is my service revenue. I could do this a couple of different ways. If I really wanted to be lazy, I could just go to my I can go to my trial balance and just grab that amount right here. And then I'm going to go ahead and I'm going to actually, what I'm going to do is I'm going to copy all of these all the way down because I'm being very lazy and I don't want to spend a lot of time typing things over and over. Okay. And actually, it goes down one. Oh, stop. And you got to tell your computer not to give you a hard time. So I'm going to go ahead and I'm going to bold that. So what I'm going to do next is I'm going to go ahead and put every single one of those expenses right there. And so I'm going to go and grab that. And come over here to sheet 2. And I'm going to paste it. This is going to be my subtotal expenses. And let's go ahead and let's sum that. Yay, look at that. Gorgeous. Net income. I'm going to come up here to my revenue minus my total expenses. And we got 54036.67. That's the exact same amount right there. And that's our double check. We know we did this correctly. Okay, so my statement of retained earnings. So this is the easiest way to do it. I go beginning retained earnings balance. And I don't know what that is. Oh, looks like it was nothing. So right now I have nothing in my retained earnings. So I'm going to reflect that. It's going to be 0. I'm going to add. This is why I like these ones better, because it's kind of short and sweet to the point. I'm going to add my net income less my dividends. And over here, what was my dividends? 1,800. Sometimes I really don't like the online newfangled way. I'm going to go ahead and take my beginning, my net income, minus my dividends. That is my ending retained earnings. Okay, so very important to know. The next thing we're going to do, whew, that's a lot of little things going on over here. Okay. I'm going to go pick up my assets. So I've got cash all the way down to accumulated depreciation. And I might need to play with these to make them fit in perfect. And I'm thinking it goes here. Okay. So this is going to be my assets. Actually, I know what I did. We haven't done this yet, but I'm going to show you anyway. So my current assets are assets that I'm going to use up within 1 year. And these happen to be, actually, let me bring it down one more. My long-term, my fixed assets. So these are titles. So let me go ahead and grab those. Now, what I'm doing is I'm separating on my balance sheet. I'm making it what's called a classified balance sheet. I'm separating my current assets from my long-term assets. Current assets like cash, I will use up that cash that I have today. I'll use it up within a year. Same thing with prepaid insurance, my supplies, my accounts receivable. I will have, receipts for those, or I'll use up that policy. I'll use up those supplies. I didn't, this is got to be total. Okay. And this is going to be accumulated depreciation, total fixed assets. And then I'm going to add it all together. I need one more line. My total assets. Okay, this is how it's supposed to look. So I'm going to go in here and I'm going to put my cash in here. And what I'm going to do is I'm just going to grab this. Actually, I'm going to go to the balance sheet and I'm going to grab this information all the way down to my prepaid insurance. That's my current assets. I'm going to copy that, bring it over here to sheet 1, and I'm going to paste that as a number. Okay, got them. They're gorgeous. I'll fix it in a minute as soon as I get everybody in. And then I'm going to subtotal all of these. And then I'm going to go to my fixed assets, my land, equipment, accumulated depreciation. So let me go over there. 40,000, 100,000. I'll remember this so I can just do it real fast. Okay. And 833.33. And I get to total all of this. I got the accumulated depreciation over there because it takes away from the fixed assets. Okay. Why does that look like it's so much? Yeah, that looks right. Just a bunch of numbers. Okay. There we go. There's my total assets. I'm going to do the same thing over here. I'm going to do my liabilities and I'm going to do my equity. So I can already tell you this one's going to be common stock. This one's going to be retained earnings. Total equity. This is, I just know how to put these together. Total liabilities, because I've been doing it for a billion years. So I just started at the bottom. And equity. Okay. And this one up here is going to be all my liabilities. Okay, so let me go find my liabilities now. Okay, I'm going to come down here. I got accounts payable, unearned revenue, and notes payable. I'm going to copy those puppies. Paste. Excellent. It's going to go all go to where it's supposed to go. We need to be like that. And then we'll actually, I'm going to put one in here, insert row, and I'm going to bring this box down here. This is going to be subtotal. Okay. Accounts payable. Let's go over there and find it. Okay, all the way down to my notes payable. Okay. Okay, I'm going to finish up with my common stock. My common stock says it is going to be 118,500. Okay. Just throw in a formula there so we can make sure everything is gorgeous. We're not in balance, are we? This did not go. There we go. Huh. That's 227. This is only 175, 130. What am I missing? I have no clue. Okay, so if I put my clue hat back on basically, a lot of times when you come look at this retained earnings, you can see that I don't have a balance in there. And I'm not going to, because we have to find that information out from up here, which is 52,236.67. So if I go up here, this is why all of our financial statements are related. Now I balance. Look at that. Yay, it's gorgeous. It makes me happy. Okay, so now I did that. Next step I need to do is I'm going to go ahead. There's 3 steps that we do when we close out our revenue. I do 3 steps. The book does 2, but I like mine better than, because I think it explains it better. So now I'm going to show you how to close out your books. And that's what we're going to do right here. Now, I don't worry about anything in, what are we doing here? Sometimes I don't know what my computer is doing. Okay, so actually I went a little too far. I'm not going to worry about anything except for this revenue. This revenue has a credit balance. That's my first step. I need to get rid of that credit balance. So I'm going to go 69,325. And my offsetting entry is going to come up here to, usually we use something called an income summary. So I'm going to use that and go 69,325 and put a 1 there. Okay. Then what I'm going to do is I've got to get rid of all these expenses. So those are all debits. To get rid of those debits, I'm going to grab them. Normally you type them in, but I'm trying to make this a little bit faster. And we go, let's make our tick saying what's going on. And then let's see, that was 15,288.38. That's going to be on the debit side, 15,288.33. Okay, I got it. I got the total from right here. Okay, let me double check to make sure I'm still in the income summary. Good. You notice that with my income summary, there is basically there's more credit than there is debits. So what we would do is we would take the difference, that would be 3, and I would go, actually right here, 69 minus this one up here, and I get 54,036.67. Where have I seen that before? Up here. There we go. See, it's our net income. And I'm going to move that into retained earnings. So retained earnings is going to be right there. And that's a 3. Okay. Last one. That's going to be 1,800. I have a debit in my dividends. I saw it. 1,800 credit. And if I go in here and if I sum everything, all my debits and credits, I'm copying the formula. Hang on. Okay, that's 04. Okay, why aren't you doing P4 to P20? Oh, it needs to be 28. Okay, here we go. There we go. My debits and credits balance. Now, when I close my books, I should have, notice there's no closing entries all the way up to here, which is my common stock. So I'm going to go ahead and grab all that information here. I'm going to copy it, paste it here. Okay, looking good, gorgeous, as always. Then this is my retained earnings. So let me show you again, that's my retained earnings. And I'm going to come all the way over here and I'm going to go. Retained earnings is equity. Equity increases on the credit. So I've got a large credit and a very small debit. And so I'm going to subtract that debit. And then I'm going to drag these beautiful formulas right back over here, and they're not going to, let's see. I'm in balance. That's how you close the books, honeys. Yeah, done it. We're good. Okay, it doesn't take much. So there we go. That's how we close the book. So now I'm going to go ahead and jump into a lecture. Do I have anybody with any questions? I got to find out where my recording is.